Welcome, everyone, to another Friday night live stream. This is Market Conversations, and I'm Jerry Hall. Tonight, I am absolutely honored to be joined in studio by D.A.N. from Digital Asset News. Please forgive my neighbor as he races down the street. So, we're going to kick this show off. We're going to be able to have a wide range of topics on the show because Dan's a very knowledgeable man. And so we can talk about specific digital assets if you have questions. If you guys want to dive into unstoppable domains, global ID, pay ID, securing your nameplates in those particular technologies. If you guys want to talk about exit strategies, portfolio allocation, and taking a macro view of where Dan, or actually Rob, and I think the economy is going to go in the next 3, 6, and 12 months so that you can have maybe a better informed investment strategy. We're more than happy to dig into any of those topics and, of course, anything else that comes up. So this is where we put on our little hat of imagination and we pretend an incredibly lively, vivid, visual, graphic, sound introduction is done. And bam, we're going to bring in the guest. So let's welcome Digital Asset News to the channel. So good to have you here tonight. How are things in your neck of the woods?
You know, it's El Paso, Texas. So usually it's hot as hell. But right now it's raining and it's like 78 degrees, which is amazing. So I'm outside in my pool office, which people think this is awesome. It's not that awesome. I'll just tell you right now, a lot of maintenance and stuff like that. But yeah, it's a good night, Jerry. Thanks for having me on.
Well, you know, I understand your humility, but let's be honest. It's awesome.
It's not bad.
Now,
it's not bad.
Even if you drained all the water out, right? Just drained all the water out and didn't have the maintenance of the pool, having such a large open space, there's something very, there's an energy to that. You're not confined in a 15 by 15 room in your house.
That is true. That is true. I keep telling people about, the issues with it, but really it comes down to first world problems, right? I got this first world, I got this pool of humility. Exactly, Jerry, exactly.
Right on. So I'm glad that we got you on the show. We had a mix up last week and all that's forgiven and fine because I'll tell you, having found your channel maybe a month ago and taking in a lot of the previous content as well as your current stuff that you're releasing, there are some things that have come about where I think you and I are like in lockstep, right? The viewpoint that you come at this space as an investor, the fact that you bring kind of an entrepreneurial spirit to the way you've constructed your YouTube channel, and the fact that you have been so open in sharing your personal strategy, knowing that you're in a space where every single person is different and every person's circumstances could literally create their own unique strategy that could be different from yours.
Oh yeah.
But yet you're putting it out there and you're talking through it. To me, this is important because it takes the hive mentality to really get this right, because none of us are going to be an expert in all these things.
Agreed. Whatever, first of all, just to go backward, thanks so much. What happened to this hive mentality? I don't know when you got in, Jerry. I think you got in before I did. But when I got in, it was huge tribalism. When you bought a coin, it's like you were with that coin. It's like getting tennis shoes. You're like, oh, you bought Pumas? Well, Pumas are the only way to go because they're the faster, the bester, and they're just the most awesome. You're like, no. I think I like Nikes. Like, how dare you? That's a scam. That's a scam shoe. It's the same thing. I just never understood the whole tribalism. So when you first get into it, I think people they're like, oh, well, this is one. And they hear that word scam and scam and scam. But in reality, there are scams out there, right? And we do that scam of the day type of thing. But there's a lot of solid projects out there and people are doing the right thing. Just they're not discovered yet.
It's funny. The tribalism thing wasn't at all shocking or new to me. I grew up in athletics, so basketball and soccer and football were the big three, and you started playing with the boys club in boys club leagues where your team would be members of your elementary school, and every other elementary school had a team, and and that progressed all the way through until I got out of high school and I became a failed athlete in college. It just wasn't good enough. However,
but you were a college athlete, Jerry. Remember, you're a college athlete.
For like 25 seconds. First play, broke my toe, out. Anyway, this tribalism thing, I can so distinctly remember as a young man and my friends, we would go to, like, for instance, the San Francisco Giants game, and they'd be playing the Dodgers, the LA Dodgers. And that was always a big rivalry. And every Dodgers game in San Francisco that I ever went to, there was always a fight would break out. And I would see Giants fans fighting Dodger fans. And oftentimes there was blood. So that whole my team, I'm willing to go, toe to toe with anybody for my team type of mentality is something I've seen literally my whole life. So I'm not at all shocked that it would infiltrate and migrate and proliferate itself in this space. I'm not shocked at that one bit. Yeah,
you ever been to a Raiders game?
Oh, yeah.
The Raiders fans will fight amongst themselves. So, what are you going to do?
Unless there's a Kansas City Chief fan. And if there's a Chief fan in the stands wearing his Chief colors, all Raider fans unite.
Well, that's just that guy's just asking for a beatdown. He's crazy. So, that's how it is. That would be like someone going in there with a Ripple XRP t-shirt to a Bitcoin maximalist conference. Same thing.
Right. So exactly. So, let's take a walk through. Let's take a walk through how you've circumnavigated yourself around that tribalism to get yourself in a position where you could evaluate projects based off of the project, not its social media presence or its preponderance of YouTube content creators.
It's tough. And before I go on, there's a guy on the stream right now. His name is McLovin, the Irish R&B singer. Just want to give a shout out. He's always on my stream. So this guy, he's always got good stuff. So second of all, like when we're talking about these different projects, it's the same thing in business. You want to look at who is the leader, who's the CEO, who is driving the force, who is the team behind everything that's going on right now, and how can you trust it? So like when I start to look at different projects, like people, and Jerry, you're probably the same way, right? People will send you an email. They're like, hey, check out this tomato coin, check out this potato foot, or whatever project it is. You're like, okay. So then you go to the website, you do a little digging, you see what it's trying to do, and it makes sense. Then when you dig a little bit deeper, you're like, well, who is the person in charge? Is this somebody who's like a Steve Jobs type level person? Or just some schmo off the street who really hasn't much experience? Then you take a look at the actual team itself. What do they know and what have they done? Now, I mean, you can look at any type of business out there, right? I mean, Apple was not Apple before it became Apple. Microsoft, Bill Gates wasn't Microsoft before it became Microsoft, right? So everybody has to start somewhere. But if you take a look at everything and just go, okay, what are they trying to do? Who's behind it? How successful have they been in the past? And then who is backing them, then you can kind of get a good feel. And that's kind of where I start from and then go forward from there.
No, I like that a lot. I'll tell you, it's kind of interesting. You said Apple and you mentioned Steve Jobs. I'm going to show my age here.
Oh man, Jerry, me and you, we're both up there. It's okay.
I so distinctly remember this is 1986.
Oh yeah, great year.
Yeah, I have a choice, right? Uh-huh. So I had made a good chunk of money on one of my very first contracts as a contractor. Just had got my license. I'm a 20-year-old, dude, just full of himself.
The life.
Yeah. I had made some money and I was thinking to myself, okay, I want to invest this money. I wanted to do something. And I remember I looked into Apple, and there was the whole big Apple IBM. Those were the two monsters.
Oh, yeah.
Apple being the tiny guy and IBM being the monster. And I was like, I wasn't really sure that this whole computer thing was really going to take off. Wasn't convinced.
I remember those days. I
decided to buy a really cool motorcycle instead, because that was a much better investment.
You can't get ladies with stock in Apple. I mean, exactly. Now you can, but you can get one with that hot motorcycle. You bet your butt you can.
Exactly. So the purpose of even that preface of that story is I've been very aware of Apple since 1986. Mm-hmm. Apple wasn't Apple until the iPod laid way for the iPhone, which was in 2006, 2007. That's come on, that's 20 years of Apple not being much.
And remember when Apple stock plummeted when they ousted Jobs, and then everybody's like, it's a dead company, it's never going to work because its all-time high plummeted. So they're like, it's a worthless company. And only the people who have, I tip my hat to those guys who said, I have vision, I know what's going to happen, and they stuck with it. Now, what are they? I see it as the same exact thing, which is going on with cryptocurrency. And we can talk about any project, that is like, it used to have an all-time high, then it, in the gutter, and all of a sudden it goes back up. But Jerry, you brought up a good point. Remember so I like to look back at history and see what has happened to see what is going to happen. And when I take a look at like IBM was this huge juggernaut, right? And then you got Steve Wozniak and you got Jobs doing things in their garage. Well, who's going to beat the juggernaut by two, goofy kids in their garage? Well, it's what I always talk about as far as cryptocurrency digital assets. We take a look at, IBM right now is into blockchain. They're into smart contracts. They're into this conglomerate and offering businesses for it. I still say they're going to lose in the long run. The reason is because the bigger your corporation is, the more overhead, the more bloated you are, and the less nimble you actually become. So all these little companies out there that are doing these super innovations, just like Apple, just like Microsoft back in the day, just like Netflix when Netflix ousted Blockbuster, and just like the taxi cab companies when Uber came around and beat the tar out of them. It's the same thing. That's how I see it.
Yeah, dislocation is inevitable, right? And dismediation is inevitable. So if we take those as givens, right? So I'll tell you, one of the things that I try to always, I bring a level of excitement because I truly am excited.
Yeah.
Right?
Yeah.
But I always try to temper it with, I know a lot of people have come to this space because either they saw or they heard of that incredible 1 month explosion from December 2017 to January 2018, and they think that will happen again. Now, I'm not saying it won't, but it's a completely different market today than it was then. There weren't offsetting vehicles like futures and options available, which have a tendency to temper forward-looking results, or at least expectations of forward results. And it's a different kind of investor that's coming into the space now than in 2000, at the end of 2017. I know a friend that personally threw $5,000 at Bitcoin towards Christmas when it was sitting at like $15,000, $16,000, thinking it was going to go to 100,000 because he'd heard somebody say that. Oh, I don't know about that. Too many people are smart enough to take profits because they know markets go up and they go down. And the more you learn about markets, the greater or larger, your vernacular in financial literacy gets, and you start to understand the meaning of these words and terms. The IQ of the people in the market today is much higher than the people then. And I don't mean by intelligence, I mean financial IQ. We understand that there are extended bear markets, and that the bull markets that this has had are short-lived. So if you don't take profit, a lesson from you and a lesson from Mr. B and all these type of people, you've got nothing to complain about when if it goes into another 2-year bear cycle.
Two-year bear cycle. And exactly, I think you're exactly right. The people right now, everybody on this stream, hello everybody. Thanks for stopping by. I just want to tell you that if you're here right now, you're probably going to be a millionaire. And that's not financial advice, but I'm just telling you, when the people got in, Jerry, when did you get in? 2017, 2016, 2015?
No, I got in 2018. It was February 1st of 2018. I bought my very first piece of Bitcoin so that I could get some XRP.
Ah, nice. So you get because XRP was going to $50 a coin, and Bitcoin apparently to John McAfee was going to go to $1 million. Remember those days?
Yeah, I do.
Yeah, me too. So here's the thing. All the people that were around 2017, 2018, the ones that came in late, like me and Jerry, we got the shellacking because we got the lesson of a lifetime. And because of that, you can learn from mistakes. They don't have to be your mistakes. So learn from me and Jerry's mistakes. All the people that were there in 2013, 2014, 2015, 2016, they were waiting for the 2017 to get in there and just really flood the market. They knew that, you know what, it's going to be another bull cycle. They're not waiting to squeeze everything out of us, but they know that it's going to be in cycles, right? So they know in 20 years, whatever is going to be fantastic as far as digital assets, it could be Ethereum, it could be Cardano, it could still be Bitcoin, I don't know, or whatever it is. But they knew that we were coming. So now everybody here right now, I feel like we are the 2014, 2015, 2016 people. And we're the ones that are learning from all the mistakes from the past and going, okay, I don't want to be like Dan or Rob. I don't want to be like Jerry. And thank God they showed me that the things to not do so I don't screw up, and I'm a huge bag holder and I can make my profits and then move on. So everybody here, I envy you. I envy every single person here, because if I could be you, that'd be fantastic, because this is the time to be. That's how I see it.
No, I agree. Here's the thing for me, and like I hear you say this, a lot of people say this all the time. I'm not a financial advisor. I'm not a financial advisor.
Jake Parr
said, if you're sharing your experience, whether you're directly saying this is my advice, I suggest you do this, or not, sharing your experience is giving your advice.
Yeah.
I'm not a financial advisor yet, but I am applying for my license down here in Costa Rica. So I have to say, I am a financial advisor. I'm just not your financial advisor.
That's a good one. I like that.
I will
never be that, Jerry. I'll never be that.
I can't speak for anybody else. I will tell you, and I've been real open. My channel is filled with me sharing dollar for dollar exactly what I've done.
Yeah.
I'm upside down still, because I was accumulating through February all the way through September of 2018. So I basically bought the market all the way down until I exhausted my $50,000.
Yeah.
Right. And 2019 showed me that you can have an industry filled with mind-boggling innovation, right, that doesn't produce a mind-boggling appreciation in the assets that are in that marketplace.
It's true. You know what it's like? It's like that restaurant in your city that has the best chef, or a really good chef, right? It has fantastic staff and everything is great about it, but people just don't know about it yet. And once they get a hold of it and like, hey, have you checked out risottos? Oh, it's fantastic. It's got the best, prosciutto, it's got the best and all of a sudden everybody flocks to it. It's a loose interpretation. You take a look at the different digital assets that are out there. There's some gems. And remember, Jerry knows this, I'm telling everybody out there, is that we are still super early, right? And I know some people will say, you're full of it. I'm like, no. You don't understand. If you go out on the street right now and you say, do you know what Bitcoin is? Some people will say, yeah, I know what Bitcoin is. It's that thing that used to have was worth a lot of money, now is worth like half. Like, okay, you got me on that one. But the next thing, if you ask them, is go, hey, do you know what Ethereum is? Do you know what Chainlink? Do you know what Cardano? Do you know what, whatever? They're like, I have no idea. Why are you talking Greek? I don't know what you're talking about. But we all know these types of things. So we are early, and it's just going to take everybody else to kind of catch up with us, because we're the early adopters. Wait for the laggards. Wait for the next gen adopters.
Right. And one of the wonderful things that we do have going for us, like you said, the internet didn't have the internet, but crypto has the internet. And we have access to so much information. So one of the things I always like to go back to is, over time, when new revolutionary technologies hit the scene, what are the adoption curves look like? That have what kind of chronology associates themselves with these adoption curves. And if you factor in the expediency of the internet, you can just, basically cut down a 7-year cycle to 3.
Right.
So if you think about that, well, what really started this? Well, I'm going to say the truth is, it was the December 2017 parabolic rise that got the world outside of the nerds that were involved in its attention. No, I'm just being honest.
Right. I got a story for you after you're done. Okay. So keep going.
No, let's break in. Tell me a story.
Okay, so I was on Alex Mascioli's YouTube podcast a couple of days ago, and there were some different people. And one of the Ben's, he's the CEO of Changely, and he was telling his story about Mt. Gox and how he got screwed over 900 Bitcoins. Can you believe that? 900 Bitcoins. And I was like, it's not so bad. So I remember back in was it 2011, 2012, one of those years, my son comes home and he goes, "Hey, I got a great thing. This kid at school has a hard drive and he's got 500 Bitcoins and he's going to sell it to us for $500. And so here's where what I should have said. Let's get that right now. Where is that kid? Let's go find him. What I said was, that is stupid. So tell me about Bitcoin. He's like, well, it's decentralized. There's not a double spend. You can do this thing. I'm like, Alan, I go, that is nerd money. That is nerd money. No one's going to use that. That is stupid. And then like a couple of months later, so there was something about China, banning it, which they always like to ban it. And I was like, see, told you, who's smarter, kid? And now I look back, I'm like, well, who's the moron? This guy right here. So that's just how it goes.
So that was 2011?
It was 2011, 2012, 13, somewhere around there. It was it was super early, because I didn't hear about it again until a Netflix had some kind of documentary, and it was like 2016. And they did some kind of documentary. I'm like, hey, that's that thing I could have bought. I wonder how much it is now. Ooh, I missed out on that. And then nothing happened until 2017. So, here we are. So I have a story similar to that, not involving my son. So I've for a long time, as a side hustle. Long story short, I used to be a professional poker player. I've continued to play as a side hustle, as a way to generate little chunks of money. So 2013, I remember this so well. I'm sitting at a table in my local casino where about 200 people are regulars. So we all know each other. I've been sitting at different tables with these knuckleheads for forever. All right. So I'm sitting in a no limit hold'em game, and I was not the most feared player on the table, but everybody kind of respected me. I was a winning player, and when you're profitable in the game, people, they recognize that. They don't see you're buying chips all the time. Matter of fact, you're the one taking chips to get cash at the end of the night. So anyway, I'm sitting there, and the dude who I've seen this guy gamble his money away so many different times before. Oh yeah,
he goes
I know
broke.
those guys. Yeah.
He goes broke, and he says, "Hey, Jerry, can I talk to you outside for a minute?"
Oh.
And I'm like,
come to Jesus meeting. Here it comes.
All right. So I go outside. I know he's going to ask me for money.
Yeah, that's right.
However, poker players are generally good for it. They borrow 500 from you. They're going to pay you back the 500 on the day they say, because if you don't, they'll never see another dime.
Yeah.
It'll be up, and they won't be able to play the game that they love and are addicted to. Mm-hmm. So I go outside and I'm listening to him. He goes, "Hey, can you stake me 500 to get back in this game so I can get even? And I'll repay you with this Bitcoin thing. And he spent 10, 15 minutes explaining Bitcoin to me. And I thought to myself, that is the stupidest friggin' thing I had ever heard of. That'll never go anywhere. He says, oh yeah, it's going to be huge. I'm like, how can a thing that your computer just generate ever be a thing?
Yeah, that's nerd money. That's nerd money. No one's going to go into that. It's dumb.
That'll never happen. It'll never have any traction. If he would have just said, hey, can I borrow 500 until Friday? I would have given them $500 probably. But to try to sell me this thing that is never going to go anywhere. Oh, and it would have been 500 of those things for the $500.
Oh, yeah.
These Bitcoins. Now, they're worth more than that. Yeah, right. Sure they are.
Yeah, right. And so you know what? You and I had the same issue, right? We had a great opportunity, but maybe the person that was trying to explain it to us, they just couldn't get it through our head, right? So everybody who's listening, I'm just going to ask you this. When you talk to your friends and family and you're trying to explain Bitcoin or tomato coin or whatever you're trying to explain to it, is it easy when you're doing it, or are they looking at you like you were talking Greek? I just want to know like what you guys go through, because I got to tell you, I mean, I've been doing my channel now for 8 months. Okay. And it helps to streamline the whole thought process of what I want to be or do with cryptocurrency digital assets. But I will tell you this, a friend of mine, this was like 3 or 4 weeks ago. I said, hey, and of course, this is what's going to happen to you in the future. I'm just telling you guys right now. The people who laughed at you for investing in the cryptocurrency are the same people who are like, hey, what's up with that Bitcoin? Hey, where can I get some XRP? Hey, what's up with Cardano? It's the same people. So when he was talking to me and he's like, hey, man, so what's up with this Bitcoin? I was like, well, Bitcoin, it has certain elements of money. And to relate that to gold, and it's fungible and da-da-da-da-da. And he was like, I could just see just the glaze go over his eyes. And I was like, damn, I kind of screwed that up. So I was thinking about that for a couple of days because, I hate making mistakes. So that's why I think it was like 2 or 3 weeks ago, I talked about the Bitcoin elevator pitch. And the thing is to not give people too much. And I challenged my subscribers, said, give me your best elevator pitch, how you would describe Bitcoin to somebody. Because the big thing is, because I was in sales and marketing for a number of years, and I can tell you, if you don't have somebody's attention within a certain amount of time, they're gone. And I think that it is our job, all of us, to get people involved into this space. Because, is there any better opportunity right now? If you're going to look at like the S&P 500, people have made a lot of money so far, right? But historically, and Jerry can tell you, the returns per year are not fantastic. And I talked about it. I said, if you're going to have returns of like 7 to 10% in a year in the traditional market, that's fantastic. But we call that a Friday over here in cryptocurrency land. So I don't get it. But as far as the elevator pitch, I said like this, make it simple. I say Bitcoin's digital gold. It's scarce. It's only 21 million. And it's market insurance and for all this crazy money printing we're going through. Unlike gold, you can send it anywhere to anyone in the world for less than almost next to nothing. And it's the best performing asset class ever. It's better than gold. It's better than stocks, better than everything else. Used to be a nickel. Now today it's 11,000. And that's why I invested heavily into it. So if you can say something like that without going into like the whole rigmarole of everything, it kind of draws them in and you can kind of explain more later. That's my 2 cents.
That's a really good point. I've created a very personal way where, I don't pitch it anymore. Matter of fact, I won't pitch it anymore. And the reason I won't pitch it anymore, because it's so vast, nobody can get their mind around this immense 3D puzzle that is digital assets in any short period of time. But what I have done is said, when people ask me, what are you doing? What are you involved in? Which is a very common question to me, especially along a lot of my longtime friends who might have been out of my life for a year or what have you. What have you been doing with you? I said, I've been studying finance, economy, and the innovations of digital assets. And they'll go, okay, I have an idea what economy is. I have an idea what finance is. What's this innovation of digital assets thing? And I go, well, it's the technology of moving value. whether it be from me to you or from somebody in the United States to Japan.
Right.
And then I just stop at that. And if they want more, I'll give them more. One of the things I have found to be, though, the most helpful when trying to explain the value proposition. So it's one thing to explain what digital assets are. They're a means in which to convey value. Okay, simple. But the value proposition cannot be understood unless you understand the detriment in the existing currency markets, the existing debt markets, what have you. So I always direct people, I direct people to Mike Maloney's The Hidden Secrets of Money.
Oh, yeah.
And they're like 8 or 9 little 45-minute snippets that obviously are trying to direct everybody to his gold purchasing business, which is that's his right. He's a capitalist, and I applaud him for it. But it contains solid information around how currency is developed, how it gets into the system, what's going on with it in the system, and the shortfall to modern monetary policy.
Yes.
That is the real value proposition for fixed supply digital assets that are decentralized and cannot be governed or manipulated or seized. That, if you don't understand how the old system works, you can't truly understand the value of the new system.
Yeah, and it's true. Maloney, when I first got into it, I'd never even heard of them. Of course, my subscribers, a lot of people that come into I got to tell you, there's a lot of smart people in this space. And they tell me, hey, man, you got to look at Maloney and, for comparing gold to everything else. I was like, okay, I'll take a look. Fascinating. So everybody on this live stream, if you haven't seen Mike Maloney and just follow anything he does on YouTube, he's got fantastic information as far as like what gold is, cryptocurrency, money versus currency, and then how all fiat throughout the entire history has gone to zero at some way, shape, or form, and at some point. And it's really eye-opening. So even like that, that's one of the things where it kind of got me into the fold of, you know what, savings accounts, because everybody's talking about savings. Because Jerry, you grew up in the same type of era, right? You know what you got to do? You got to take that, $10 that you get from your paycheck and put in that savings account in the bank, because that's where it goes.
Yeah.
So that's ridiculous, right? So now it should just be, I see it as a savings account should be gold, silver, Bitcoin, and any other digital assets you want to hang on to. And I know some people are like, why gold? Why gold? I'm not a big gold bug, but been around for thousands of years, so I'll hedge my bets here and there. Not to say that I'm not going to invest heavily in the cryptocurrency, because I am.
Well, what's interesting is when you and I were growing up, and I think this is true for most people. Now, I could be wrong, but if I look at a characterization of the standard American, their worldview tends to be generated from about age 13 to 25.
Yeah.
Right? It starts forming at 13 going forward and kind of gets semi-solidified around 25.
Right.
Now, I'm not saying that people don't evolve and change. I mean, I'm a classic example of re-educating myself time and time again. But the point is, our worldview was kind of formed back then. And when you and I were at that time of our lives, it was about saving money. Matter of fact, our grandparents probably did pretty well just off of, 10 and 30-year bonds.
Oh, remember those? Yeah.
Yeah, because they produced anywhere from 12 to 17%.
Mm-hmm.
That's
unheard of these days.
Nowadays. So you and I have had to change from what we were taught. We were taught save 10% of your money, put it in the savings account, maybe put it in a bond, maybe put it into a dividend paying stock, something that is, and reinvest it so that you get the power of compounding interest working for you. And if you do those things, you'll be fine. But if your returns are not exceeding the 3% targeted inflation, then you're not gaining any ground on, quote unquote, the purchasing power of the US dollar. And that is what this being in this space has clued me into.
Yeah.
It's not about the dollars. It's not about you having $1 million or $5 million or $800 million. It's about the purchasing power of your dollars. Do you have more purchasing power at the end of the year than you started the year with? That is the bottom line, right? You can mess around with all the metrics and valuations of everything in between. Bitcoin goes up and down, gold goes up and down, da 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 da. Can I buy more milk at the end of the year than I could at the beginning of the year? That is the game, right? And that's a game I want to win. It's a game you want to win. It's a game every person in the stream wants to win. But I'll bet you if we ask that question, what is the game you're playing at the beginning of the stream? My guess is that less than 1% of the audience would have said to have more purchasing power at the end of the year.
It's a good point. It's a good point. Not only purchasing power, but just assets in general, right? If we can have assets per se, and that's what people are trying to accumulate anyhow. But when you were saying about the inflation, 3%, right? I don't know if it was Maloney or somebody else, but I've heard this before, which is inflation is the second tax. It's the secret tax that really kills you. So in America, and I don't know where everybody else is, Canada, Mexico, Europe, Australia, we have, reasonable tax rates depending on where you live, right? For state tax and also federal government tax. So on top of that, then you have inflation, which drops your purchasing power, like Jerry talked about there. So you're losing out day in and day out. So when we talk about these savings accounts, they're pretty much worthless. And that is a big problem, and especially with what's going on with the quack economics or quantitative easing, that type of thing. So yeah, I'm not too optimistic about that whole part. That's all I'll say.
Right on. Well, I want to commend you. Like I said, I brought up already in this video in the stream, but I want to direct more attention to it. And that is, you shared with the world an exit strategy. Now, in December, I did the same thing. Matter of fact, on my channel, on my playlist, I have a whole series called Beyond Moon, where I go from episode
Catchy
one.
Title, Jerry. Catchy title. Beyond
You
Moon.
like that?
Very
Beyond
nice.
Moon?
That's pretty good.
Episode one's all about understanding sudden wealth syndrome and the mental and emotional elements of dealing with the potential wealth that could come from being such an early adopter in such an innovative, explosive space. Episode 2 is about goals and preparation. Step 3, I went through and detailed my exact exit strategy, how I was going to turn profits from crypto into a reoccurring stream of revenue without touching my capital.
Nice.
Right. So, and it was a multi-tiered, multi-phased. It took an hour to explain it. It
takes a while.
Deal. And then there's some interview. I've got an interview with a tax attorney. I got an interview with a wealth manager, a fiduciary wealth manager, and just kind of expose people to thinking beyond a back of the envelope calculation about how friggin' wealthy they're going to be.
Right.
And think it through. What are you going to do with that capital? How are you going to play it? So I wanted to commend you on a video that you just recently did about exit strategies and sharing your exit strategy and your portfolio and your thinking behind how you crafted that. I wanted to give the audience an opportunity because I think you've got a handle on this. And maybe my ego, but I think I've got a handle on this. Is there anybody in the audience that has a question relative to how to deal with the capital that can be created through these assets, knowing this one, and here's the caveat, knowing something that Dan and I have focused a lot on, there is no evidence that any of these assets will reach plateaus and stay there. There's no evidence in any of their market that's ever been in the history of markets. And there's no corresponding evidence in the crypto market that parabolic moves stay up and plateau. Matter of fact, over the 10 years of crypto, you can count 6 parabolic moves and none of them have lasted longer than a month. Over 6 years.
This is true.
Does anybody have questions about how to deal with capital, or questions about their idea that they're not sure of, that they would like to bounce it off of two guys that have done a lot of work in thinking about how to deal with capital? Go ahead.
No, I was going to say, I have a question.
Fire.
And the question is, this is actually from Stephen Kurt, and it's a pretty good one. He says, hey, some investment pros say to keep some cash along with other assets. So as everybody's typing in their answer for what Jerry just talked about, I want to try to answer Steve's question.
Please do.
Some investment pros say to keep some cash along with other assets like cryptos, gold, and silver. Why would they say that if cash isn't worth anything? So here's the thing. And everybody, all of us have been around since 2008, depending on your age. But I can remember in 2008 when the financial crisis happened and we had all those homes just go under because of just poor economic policy and different things that happened. So I can tell you from experience, friends of mine, friends of my wife's, my wife's, like I got 10 of them, my wife, what they did was they had cash just waiting because they could see the writing on the wall. They could see all these different swaps. They could see all these different interest rates that were, based on, shaky ground. They're like, you know what? I think something's going to happen. And when they had all that money there, and Raoul Pal talks about this in some of his talks, he says, you know what? Cash is still king because, purchasing power aside, as things start to collapse and you have different opportunities to buy hard assets, land, houses, apartment complexes, and you are the only one or one of the few that is able to actually put cash money down. Not that you can go to a bank, because the banks are going to lend out squat because they're already underwater. They're having problems. Some of them actually shut down in 2008. So if you have cash on hand, you could do a lot of damage, and you could pick up. I remember houses that were going for $350,000 all the way down to $100,000 because the banks were like, we got to get this off the books. And now what those people are doing? They either resold everything or they have a little haven of different rental properties. So that's how I see that type of cash. Now, will cash ever go away? I don't think cash will ever go away. I don't think so. But I can tell you with this exit strategy that me and Jerry did his and I did mine, and I talked about cashing out and everything else. But there was a subscriber who had a really good point, and I try to read all my comments, but I get busy. But I still do try. And he said, he or she, I don't know who it was. They said, hey, why would you cash out into all money? Why wouldn't you just take, let's say you made 100,000, right? And why would you put that in the bank in money? Why wouldn't you just do it like what you talk about, which is take that over, transfer into USDC, put it into the Celsius wallet or any type of wallet or exchange or something like that can pay you interest because the banks aren't going to give you anything. So if you can do that and you had, I don't know, like $1 million, $2 million, $3 million, why would you put it into money? Because you can just make interest on that and live off that. And then with the different cards that are available right now where you can transfer from cryptocurrency to fiat, because the reason why we have to use fiat is because Walmart's not taking Bitcoin right now. My mortgage company isn't taking tomato coin. So I have to use fiat. But if I could do those types of things, I think it's one of those instances where I'm like, maybe I will do that. So that's my 2 cents.
It's a great 2 cents. And here from XRP Holder, what up, Jerry and Rob? Why would you want to cash out if you know the cash is slowly losing its value? I think it's important to draw this distinction. And that is, I'm not down on cash. Cash that I earned today will have the same purchasing power tomorrow. It's only over an elongated period of time does that dynamic change. So what I am a proponent of is using the universality, right? The universal exposure that cash can give me to any asset. I can buy any asset with cash. Okay? So markets and cash are two separate things. The free markets establish price for an asset, and they tend to correlate with something much larger and it's the world or global environment outside of it. So for instance, if you look at real estate is, in my opinion, highly overvalued currently, right this minute. That'll change if we have another 2008 type event, which I believe we're going to because of debt and etc. I believe 95% of all the equities in the market right now are overvalued. Right? And there's a lot of reasons that we can point to. We can point to stock price manipulation with corporations putting out bonds, taking the proceeds from the bonds, buying their stock back, reducing the supply of stock in the open market, forcing the demand to pay a higher price for the limited supply that's available. Supply and demand economics were in play. Okay, great. So as long as that's present, I'm not going to be putting money into stocks, except for a few carefully chosen specific ones that I do not believe are overvalued. And real estate as a whole, I wouldn't touch it unless I found a distressed property that had the correct valuation for what it could generate going forward, etc. I mean, everything needs to be taken on a case-by-case basis. But the point is to use cash that I got today to do that tomorrow is a beautiful use of the currency.
Yeah.
To put $100,000 in a savings account that pays 0.05% per year to watch inflation eat 3% of it over the course of the year, to me is just not good money management. That doesn't mean anything other than that. So when I'm talking about cash and I'm talking about money, you have to understand the context in which I'm talking about it. Over time, like Dan said, assets appreciate. Over time, real estate's going to appreciate. Solid companies that produce a value for its customers will appreciate over time. Gold has appreciated over time. I believe fixed supply digital assets that provide a value to its customer base will appreciate over time. I think was able to draw that distinction between cash today and its value versus as a store of value over time.
Yeah, and no, it makes sense, and it's the same thing. Like if you just store cash, like me and Jerry were taught, you're going to lose out, because if it's not going up, like he said, by 3%, you're screwed. So why even do that? Assets are the big thing. That's why I always say in my channel, I don't say, well, this cryptocurrency, that cryptocurrency, because that's just currency. Assets, digital assets. Those are what is going to drive everything moving forward. And there was just one caveat I wanted to add with what Jerry said as far as like real estate. I wouldn't invest in real estate right now. I saw a report that houses, I mean, in the cities that I live in, I live in El Paso and Houston, and you cannot get a house because they are getting bought up like crazy. And I don't know, whatever the mentality is, sure, whatever else, right? But if I was if I would do it right now, I'm not buying those right now. I'm waiting for a little turmoil to happen. And I definitely, this is the caveat I want to make mention, I would never get into commercial real estate right now. Can you imagine, Jerry, what's going to happen with commercial real estate when all these big, huge companies are like, hey, we could have done this, remote working from all this time and saved a ton of money. We could have made our employees happier, and we could have just been better for it. I am not going to pay for that commercial real estate office. Guess what? Half of my force is going to be staying home. Why wouldn't you do it? So if you're in a commercial real estate, I feel sorry for you. I mean, I don't know. Maybe if Amazon comes calling, like, hey, I'll sell you my commercial warehouse. You guys are blowing up.
Again, everything has subtle nuances. So in your description today, right? Let's say I had capital. Let's say I had capital to deploy.
Right.
A commercial property that contained a dollar store, a dentist office.
Oh yeah.
A mailbox company.
You need this.
Is for sale, and the property next to it that a McDonald's, or wait, it couldn't be a McDonald's. It would have to be something else. A Burger King or a Jack in the Box is sitting on. I'd invest in the Burger King or Jack in the Box because I know cheap food, even with all its health things, cheap food isn't going away. People are going to flock to cheap food. They do, no matter what's going on in the economy.
It's delicious. That's why.
The dentist's office and the dollar store and the post office plus thing, I don't know. You know, those markets can be circumvented. There's a great question on the screen. Rob, you take your first crack at it, and I'll jump in. But this is a great question that I get asked all the time because people want security. They want a secure income from their digital assets.
Which one? Oh, Bill Gold?
The one on the screen.
So, okay. Yeah, so I was looking at Stephen Kurt's question too. I got to answer that. So Bill asks, if you need $5,000 monthly income to retire and your assets are sitting on, let's say, Celsius earning 4%, but when the value fluctuates, then you might have 5K this month, but 4K next. Any suggestions? So like with this one, this is one of those things where it's like, first of all, do you want to keep $5,000 into Celsius at all? Maybe you want to keep a little bit less because it's a hot wallet. And if we know anything, hot wallets aren't the greatest thing. Nano Ledger, you can put it on there. But if you want some type of security and you say 5,000, I think the question you really have to ask yourself is, do you believe that the asset that you put your money into will appreciate over time? So let's say it goes from 5K to 4K. Does that bother you? To me, I got to tell you, since I've been, me and Jerry, since 2017, 2018, when I see it go from I see a drop of 10, 20, 30%, I'm like, Tuesday, because I know what's going to happen. It's going to go up. So as far as security, right now, it's going to fluctuate greatly. I don't think I still say I would do it because it's better than, putting that money in the bank and getting 0.001. That's my take. What do you think, Jerry?
Well, I'll tell you, for Bill's question, I've never come at it from, if I need $5,000, then I work out the math and I have the capital to produce $5,000, and then I call it good. If I need $5,000 a month, then I need to have the capital that could produce $7,000 to $8,000 or $9,000 a month. And if it fluctuates, I'm cool. You know what I mean? It doesn't matter if it fluctuates or not.
Oh, yeah. I kind of misread that question. Because he's saying $5,000 monthly income from 100,000.
I overshoot it because I agree with, I don't like the idea of having all my assets out of my control. I just don't like it one bit. I know people love Celsius and Nexo, and I'll be honest, I'm a Nexo client. I've had collateralized loans with them. Thank God those are all paid off. And I have assets sitting on their platform earning me more assets every single day. And I love that. But there is a risk associated with it. I want to get to Stephen Kurt's question first. Now, I know this was for you, Rob, but I'd like to jump in and answer it first and then turn it over to you because I think my take is probably going to be a little different than your take.
Let's hear it.
Here's Steve's question. Rob, do you think that holding that cash would be good to buy a house with that cash in 2 to 3 years when houses will be plentiful and cheap? And here's my answer. Any real estate purchase where you are buying the property with your assets and you are not taking a loan is a step in the right direction. Acquiring debt to buy assets that can depreciate but should appreciate is always, you have to calculate all the risks. So be very clear. But when you're buying the house with your capital and you're not taking a loan, it's a win-win situation. Because even if the property doesn't appreciate, it's still property. It has uses. You can grow food on it. You can rent it to others for, if it has a house on it for shelter, etc. That is the smartest real estate purchase you can have, is the one that you use your capital. Same with an auto. Buy your cars with cash. When you take loans and anytime you buy something that is a depreciating asset and you buy it with a loan, that's a double negative. It's a double negative. We're not in this business to be double negatives. We're in this business to be positive, productive, capital generating ninjas. Let me turn it over to you, Rob.
Yeah, like Jerry says, we're not in the business to lose money, right? That's usually how it works out. We're not in the business to lose money. But my take is a little bit different from Jerry's. So the question again, holding cash would be good to buy a house in 2 to 3 years when houses will be plentiful and cheap. Well, first of all, let's take it back. Let's say that you had $200,000. Okay. And again, not financial advice. If I had $200,000 just sitting around, well, I do a lot of things. First of all, I would not sit on that money because, as Jerry talked about, the 3% depreciation. And who knows what's going to go on with the dollar, right? In the immediate future or long term, 3 years, 10 years, whatever else. So if I had $200,000, maybe I would think about putting that into, well, first of all, like we talked about, cryptocurrency digital assets. Do you think in 3 years, I'm going to go off on a limb here. I'm going to be a safe one. Let's take Cardano, for example. Cardano's sitting at what, 15 cents right now? Its all-time high was $1.10, something like that. Do you think in 3 years, Cardano won't hit 50 cents, 60 cents? Do you think Bitcoin, which is now 11,000, in 3 years won't hit 20,000, 30,000, 40,000? Do you think, and Chainlink, which is sitting at $10, which is pretty good, won't go up to $20, $30? So that's one caveat. On the other side of that, this is going to be a long one. If you have like an Amazon business like I do, what I would do, I would take that cash and I would put it into assets, which would be product, which I would talk to my distributors and manufacturers and go, what do you guys got? Okay, well, what's the profit margin? I would get the spreadsheets, look at that and go, okay, so if I spend 50,000, I can make 82,000 in whatever, how many months it is. I would do it that way. But going for what Jerry said, which was, put your money into these houses, it all depends. Is this your homestead house? Or is this a type of property which is a multi-home or even apartments or even condos where you can have multiple people live in there and you're going to rent it out? Or if, God help us, we can actually get out of this coronavirus, get some kind of, and get this all taken care of, whether you believe in it or not. I don't know what you believe in, but if we can take care of this and Airbnb starts to come into play more, if you could get a house that is in a pretty good city, that's in a pretty good location, and you can see, for the different criteria of what is being rented around there as far as Airbnb or just regular 12-month rentals, you might actually want to take out that loan. Jerry is going to go against me. You want to take out that loan and go, well, you know what? If I can put so much down and I can take out a loan and get this house and it is a profit-producing house, I might want to do that because it just depends on what you want to do. If you're comfortable with, which that took a long time for me to realize, I'm okay with that. If I have, and this will go back to what Jerry says, money producing assets. And that's my long answer.
No, that's a really great answer. And everybody has to understand what their risk tolerance is. See, I'm not risk on or risk off. I'm, hey, everybody who puts $1 into something, doesn't matter what it is, should make it their job to understand the risks associated with it. When you borrow money, that is a contractual obligation for repayment. You have to understand the game that you're playing. We're no longer in a world where there is, from the top down, fiscal responsibility. Therefore, all the underpinnings of every single market, and soon to be touched by crypto will be included in that eventually, is the underpinnings of what governmental policy is as it pertains to money. We are in this crazy time where the majority of the growth of this country isn't from the creation of a good or providing a service, it's the creation of debt. Take debt to its primary definition, debt is taking the prosperity of tomorrow and bringing it into today. So I'm taking prosperity from the future and I'm taking it today. What does that leave for the future? The repayment, not more prosperity. At some point, this does not end well. I don't know what that is. But, and so do you want to be the one in that game of, musical chairs? Do you want to be the one with loans out on several properties, and now all of a sudden your tenants can't pay you? Well, guess what? You got to pay the mortgage or default on the loan.
And Jerry, let me pause you for a second, because this is going to come back. This is going to come back to a caveat what I'm talking about. So I talk about Airbnb and everything else. If you watch YouTube, you would probably see all these gurus that would tell you, you know what you need to do? You need to take out massive loans and buy up 10 houses. And if you can buy up these 10 houses, then you can rent them on Airbnb, which was true a year ago. But guess what happened? Airbnb was supposed to go public, and they got kicked in the teeth because of the coronavirus. And now what do you see? Well, these same gurus, you don't see them anymore, because what they're doing is they're sitting on houses and they are underwater bigly. So if you do something like that, there is a huge risk. It looked good in the beginning. She's like, well, that's what everybody's going to do. It makes sense, right? It's the same thing with cryptocurrency digital assets. That's why I dollar cost average in. I don't do the 100x leverage, because I'm just not smart enough. That's what it comes down to. I just cannot get into trading. So I'm just like, you know what? I'm going to do a slow play. I'm going to set myself up for the future as best I can. And off I go and try to minimize the risk as best I possibly can.
This is a great question from Zorba. Rob, you mentioned maybe not Celsius for stablecoin. Which one would you suggest cashing out in? And then Jerry, any thoughts? So
I don't know. I got to tell you, like the whole stablecoin thing, I was like, why do we really need that? What is the whole prospect, especially if it's tied to the US dollar? But if you look at it, and especially with DeFi, and you can take a look at, like, I use two apps primarily. I use Celsius and Voyager, and they both pay interest. So when you take a look at like USDC, I don't know specifically. I thought it was like 10% or something crazy kind of interest rate or something like that. And then the Celsius coin, I think, pays you a lot as well. So honestly, any of those I would be okay with. I know some people have their reservations against Tether for different reasons, but look, Tether, from what I've seen, it looks like they are investigated pretty thoroughly, and they have to do some regulations, but I'm not 100%. But USDC, Celsius, fine. Jerry, what do you think?
Well, my thought, I don't have a specific, I can't answer that question specifically because I'm not exactly sure the context of it. But I can tell you, generally speaking, every single scenario that I have run through for myself and with friends who've called me and specifically asked for my advice is this: have a plan. What is your plan? Is your plan sound? Does it really meet the view you see for the next 12, 24, 36, 72, months, 5 years, 10 years? So any cash out scenario I have has a plan behind it or a view of how I see and think things are going to go down. And I tailor the exit strategy to meet that view. So for instance, for me, my exit strategies out of crypto are out of crypto, pay my taxes, and get into, well, I'd say high 10% interest or better paying vehicles. So currently right now I have access to very safe 1-year CDs down here in Costa Rica, which is unheard of in the United States.
Yeah.
Right. 10% CDs that I can roll year after year, or
10%
not
CDs.
Or not roll and get into a different element if the landscape and the environment and the world changes. Right. To me, gives me the flexibility and meets my criteria of I want to produce 10% on my money. And up into $38,800 a year, my dividend or interest income is tax-free. Well, in Houston, Texas, $38,800 is probably not a big deal. In Costa Rica, for instance, Rob, I don't know if you know, I live off of about $350 a month.
Yeah, I've heard Costa Rica is awesome.
So $38,800 a year of income down here would increase my quality of life exponentially, but still keep me under any tax liability being a United States citizen and earning my money in the United States.
Yeah.
So everybody should take into account all those external factors when creating any kind of exit strategy. It's not as simple as saying, well, I bought it, my average cost per coin is at 42 cents. So when it hits $3.50, I'm going to cash out and probably have a 20% capital gains tax. And that's the end of my exit strategy. Well,
yeah, no.
Okay, that's great. But, the next question. Go ahead.
Oh, no, I was just going to say, there's an old phrase. It's not how much you make, it's how much you keep.
Exactly.
So everybody here, this is more of getting into a little more advanced type stuff, and Jerry could probably help you out. But really, if you start to think about taxes, what's acceptable to you? And I've got people on my channel who always say this. They say this. There's people on a spectrum. They're like, taxation is theft. I'll never pay taxes. And down with the government. And there's like other side is like, I got to pay it anyhow. And everybody's in the middle, right? Well, here's the thing. I've been through an audit. You don't want to go through an audit. Audits suck. So make sure you pay your taxes. But it is your right to find ways to minimize those taxes. Not tax avoidance, but minimize those taxes. And Jerry's probably got a pretty good idea being in Costa Rica or in Puerto Rico. I've heard great things about that. There's also a really great book I recommend, The Nomad Capitalist by Henderson. And he talks about traveling the world and going to the places. Go where people appreciate you. 5 words. Go where people appreciate you. So if you're in one of those countries where it's like, hey, I'm getting raped with all these different, federal taxes and state taxes and gumshoe taxes and everything else, maybe check out that book and see what else you can do. So again, it's not how much you make, it's how much you keep. And I think Jerry's got some probably good advice on that.
Well, everything, everything boils down to the specifics of your situation. Rob's situation is different than mine. Mine's going to be different than yours. Every single person who's left a comment tonight, you have a unique situation. So if you can't, through the general advice that you get from YouTubers such as ourselves,
yeah.
Forecast yourself in this kind of, look at it in this tier. If you don't think that you're going to get more than $300,000 from your crypto investments to deal with, then you probably don't need any real help. You can figure out under $300,000 on your own pretty easy. Sure. If you're like myself, who plan to be filthy friggin' rich, I'm going to need a tax attorney. I'm going to need a fiduciary wealth manager because it is a full-time job. If I were to do it myself, as knowledgeable as I am, just to maintain some sanity around it, right? I also want to have time to enjoy the wealth. So finding a fiduciary wealth manager who by law is not going, also a fiduciary manager who's not also a broker. I want a strictly fiduciary wealth manager whose job it is to put me in the investments that meet my goals. And then obviously a licensed tax attorney who's not only a lawyer, but a CPA tax specialist who knows and understands my situation. I'm a foreigner, so there's international stuff that has to be taken into consideration that Rob may not take into consideration, et cetera, et cetera. So think about these things. This is the time to research this stuff. This is a time to, if you need to start at the beginning, and find Mike Maloney's The Hidden Secrets of Money so that you understand the system that the world plays by so that you can tailor your plan to take advantage of the deficiencies in that system, get the right team of people around you to maximize your wealth so that you keep it and build on it as opposed to spend it through, depreciating Lambos and, vacations to the Bahamas, things of that nature. You'll be okay. We've got plenty of time. None of us are going to hit our magic numbers by Christmas of this year. I guarantee you. So just take a breath, know that you're in the right place, and do the homework so that you can be prepared to produce the desired results that you have.
Right. Couldn't agree more, Jerry. You guys right now, you guys are all in the right place, I believe. I think that, the market's doing well. We'll see what happens, but you got to remember, look at the price action 2017. You know what people were betting on? White papers and vapor and nothing. There was nothing out there. Now we have actual mainnet launches, actual products that are being used, actual partnerships that are going on. Like I said, this is a great time. Now, having said all that, you have to understand, sometimes I'm a complete moron. Just ask my wife; she'll tell you. So do your own research and just make sure that like Jerry said, she had a great point. Make sure it works out well for you. That's all.
I'm looking at the clock. Let's take a minute to address Stephen's last question here. Right. We'll get last thoughts from Rob. I'll bring in Brady for his thoughts about the show, and then we'll close this sucker out. I'll read the question. In keeping with paying taxes, I plan to put all my crypto profits into Bitcoin as I slowly exit out of crypto. Will the IRS still be able to tax me if it's in Bitcoin? Dumb question. Not a dumb question. It's not a dumb question. I'm not a licensed legal tax advisor, so therefore I would always encourage everybody to go find one. Clinton Donnelly is somebody that I've interviewed on my show. Excellent man. Will do free consultations before you become a client. If you don't want to become a client, you don't. How about you on that, Rob? How do you want to address this one?
Well, yeah. I'm not a CPA. Don't even play one on TV. But I will tell you this. If you've ever done KYC, know your customer, AML, anti-money laundering, if you ever put in your social security number, your photo ID, there's a good chance that the governments have your information. They got a lot of it. So as far as will the IRS still be able to tax me if it's in Bitcoin? Well, depends on if it's a taxable event, right? Again, talk to your tax attorney or whoever. But if you sell it or if you transfer it, going from Bitcoin to Ethereum or whatever else, those are taxable events in the US. I don't know for the world. But I will say this, and if you're going to plan out for the long term, I'm just getting to this now. Take a look at traditional, SEP, and Roth IRAs later on. This is more of a big thing. And for me, you can have a traditional or a SEP, but you're going to get taxed on your, when you take everything out at 59.5. But if you do a Roth, you only get taxed on your contributions, which is $6,000 a year usually. And then after that, let's say you put in $6,000 a year and you buy a Bitcoin for $6,000 and it goes to $1 million like crazy John McAfee says it did. You don't have to pay the taxes on that $994,000. So that's all I'll say about that. And again, that's just what I'm looking into now.
No, that's really smart. I would address this question by saying, if you're using Coinbase or Uphold, now I can't speak to the other exchanges, but I can tell you that Coinbase and Uphold are both excellent providing year-end data that you can provide any tax preparer, whether it be with, I've already forgotten, what was the famous H&R Block?
Yeah,
yes.
H&R Block. Yeah.
Or even your mom who does your taxes. They prepare you. They send you the data, and it's very easy to discern what were profitable events and what weren't by simply getting the data from the exchange that you use. I use Uphold. I also have a Coinbase account. Everything I do is fiat in. I purchased a crypto. There have been times I've sold some crypto to buy a different crypto. And at the end of the year, they will tell me, trust me, Jerry, you made 25 bucks on that Ethereum XRP conversion. Oh, okay. I got to pay my 25% or 20%, whatever. Anyway, go see somebody about it. Again, you're gonna need a team. Go talk to these people. Go interview a tax guy. Interview 10 tax guys. Go understand the process before it's time to utilize the process. That way you're prepared and you can make corrections. Talk to people you trust. Send Rob questions. Send me questions. I'm always open to answer. If I have the time, I will answer anybody's question about anything. But most of the time, my answer is going to be something like this. Have you already gone and talked to a professional? What did they say? What was their advice to you? 9 times out of 10, my response is going to be, they gave you some pretty good advice. I'd probably do that. How about you, Rob?
Solid advice. Or you could just take my advice, which is, if you wait till the last minute, it only takes a minute. So good luck with that. No. You got to get out there and you got to get things done. Listen to Jerry, smart guy.
All right, Rob. Before I put you in the green room, your final thoughts.
My final thoughts is that, we talked about so many things.
Anything, maybe something we didn't talk about. This is your time with the 58 people that are still in the chat and in the stream who've stuck around because maybe this is the nugget they've missed.
You know what? I do want to make mention of one thing, and my battery's going to die, so hopefully I make it. There's a bigger question that everybody needs to think about, and this is way far in advance. What do you do when money isn't an object? So think about that, because in 2015, I let go of my day job. I went all online. And a lot of my businesses are just, they pretty much are automated. So I had a real hard time with figuring out, well, what do I do when I don't need money? And of course, the basic answer is, well, I'm going to pay off my bills. I'm going to do all this, take care of my family. What then? So you people right here, I think you're all going to do pretty well. And if you don't need money, now you're going to have to start to think about, what is my purpose? What am I doing? What are my goals? And it's the same reason why you can have people who win the lottery and then 2 years later they're broke. So you have to kind of figure that out now. And it's a lofty question, I know, but it's just something to think about for later. That's all.
Thank you, Rob. I'm going to put you in the green room. I'm going to say, gracias, mi amigo, pura vida. If you want to hang out in the green room and chat with Brady and I in 2 minutes from now, please do. If you got to go, I understand that too. I'm going to bring in Brady, producer extraordinaire, for Brady's final thoughts. Now, I missed Brady's final thoughts last week. He gave them to me after the stream, and I regret that I forgot it because he had some absolute gems. Ladies and gentlemen, let's welcome Brady.
That makes 2 of us because I forgot too. That was actually spot on to what I probably would have forgotten had he had not said it. But it's the notion of, what do you do when you're not working for money? Like when you don't need it and it's not something you have to chase after. What do you do when you just sit there and it just like goes to you? What do you do with your life then? Yeah, you pay off your bills, you pay off your house, you do this, that, and the other. That's great. What do you do next? What do you do people need to think that, getting a lot of money is cool, but if you aren't thinking 10 years, 20 years, decades out, it won't be cool for long because it'll suck because you won't have it anymore. So those were some good final thoughts.
Why, thank you, Brady. I'll tell you, it's a joy to have you working with me on this show, and I've really enjoyed the friendship we're developing offline as well. You're very interesting person, and I learned. No. I say that because I think it's great to have people in my life that have similar thoughts and interests in some areas than myself, but also have a completely different perspective. It could be where they live geographically, and the environment is different. Therefore, they look through life with a different lens than I do. Obviously, our age discrepancy isn't huge, but it's enough that you are a different generation. You developed a worldview in a different time than I did. So my final thoughts for this show really came from Rob's insights, and I'll tell you this. This is going to be harsh, but it's unfortunately true, and that is this. Every single one of us wants to be a winner. I don't doubt that for 1 second. Here's the ugly truth. Very few of us will be. And it's not because the opportunities wouldn't have been there. It's because those who are not willing to do the work will be no different than the NBA player with a shit ton of talent, a big fat contract, and is broke 2 years out of the league. No different than that lottery winner who gets sucked up in the sudden wealth syndrome, starts buying depreciating assets in homes, starting businesses that fail. Money isn't the answer. Money is a tool. To get good at using a tool, you have to practice. You have to learn. A carpenter doesn't buy a tool bag and a hammer at Home Depot and all of a sudden be able to build a house. You got to go to work. You got to get dirty. You got to learn. Sometimes you're going to hit your thumb with that hammer, right? We've all taken some lumps and some bruises along the way. The trick is put on a student hat. Be a student. Be open to learning. Be open to having your opinion challenged. I'm not saying that I embrace being wrong, but I'm definitely open to it. And I've gotten more amenable to hearing the thoughts, opinions, and viewpoints of others through my journey in this space to develop what I believe is a more well-rounded, grounded place coming from as a human being, but also as an investor. So I have an approach every single day. I want to learn something that's going to make me a better investor. And I don't do that by staying in my little bubble of people who think like me, talk like me, and come from the same background that I come from. I get it from expanding myself and challenging myself. So I'm always looking for other content. I'm looking for contrarian viewpoints to my viewpoint. I'm not saying I always find them and that they're the right answer, but I sure do like having that challenging question that forces me to reevaluate my stance, my perspective, my position. Because if I don't, I could be making a mistake, and I want to minimize my mistakes. So for those of you that have hung with us through the stream tonight and that continue to support this channel with your comments, your subscriptions, your retweeting the content in the comments that you put in the Facebook posts and things of that nature, I'm extremely grateful. Brady's extremely grateful. Having Rob on the show tonight was wonderful. And I know if there may be one or two of you that didn't know, Rob's got his own channel called Digital Asset News. The guy makes really, really diverse, solid, practical content. I'm a subscriber. I'm a huge fan. I hope that I can get Rob on my one-on-one show, and I'll do an interview with him where I'll break down his past, his learning, what he continues to learn, and just kind of showcase maybe a little bit more of who he is as a human. I think after tonight's show, he may be amenable to it. I don't know. We'll find out later. But anyway, I wanted to say thank you to all of you who have stuck with us tonight and who continue to help this channel be a place where you can come talk about things, get some good input, and hopefully not a lot of bad input. I don't want to give you bad advice. So until next time, everybody, from Brady in New York, Rob, who was coming to us from Texas, and me here in Costa Rica, Pura Vida.
Have a good night, everyone.